The Clean Power Hour is brought to you by CPS America, the maker of North America's #1 three-phase string inverter, with over 6 gigawatts shipped in the U.S. The CPS America product lineup includes three-phase string inverters ranging from 25 to 275 kW. Their flagship inverter, the CPS 250-275, is designed to work with solar plants ranging from 2 megawatts to 2 gigawatts. The 250-275 pairs well with CPS America's exceptional data communication, controls, and energy storage solutions. Go to chintpowersystems.com to find out more.
Well, short answer is you can buy insurance for anything if you got enough money for it. Yes, we insure. It's called business interruption or BI insurance. If there's a claim or covered cause of loss, a hailstorm, fire, equipment breakdown, the insurance companies will start replacing your lost production after a certain period of time, up to typically 12 months for a site.
Are you speeding the energy transition? Here at the Clean Power Hour, our hosts Tim Montague and John Weaver bring you the best in solar, batteries, and clean technologies every week. Want to go deeper into decarbonization? We do too. We're here to help you understand and command the commercial, residential, and utility solar, wind, and storage industries. So let's get to it. Together we can speed the energy transition.
Today on the Clean Power Hour, insurance for clean energy projects. I'm Tim Montague, your host. Check out all of our content at cleanpowerhour.com. Give us a rating and a review on Apple and Spotify if you would. That helps others find this content. Please subscribe to our YouTube channel and reach out to me on LinkedIn. I love hearing from my listeners. My guest today is Hunter Johnson. He is the Vice President of Alliant Insurance. Welcome to the show.
Hi, Tim. Thanks for having me.
As I was saying in the pre-show, I know very little about insurance, but I know that it is an important part of clean energy assets. And the thing that I'm particularly interested in, Hunter, is how climate change is impacting the insurance industry. Because, even in the solar industry, we are looking at historical weather models to predict how a solar farm is going to perform. But the thing is that the last 10 years are very different than the previous, say, 100 years. And things are changing. The needle is moving. There's more storms. There's more hail. There's more hot weather. Solar does not like hot weather. And there's other stuff too, fires, floods, droughts, etc. But anyway, tell us a little bit about yourself, Hunter. How did you come to insurance, and especially this niche now of working in clean tech?
Yeah. So I'm out of Missouri. I got into insurance about 10 years ago, straight out of college. It was a good fit for me. I'm a big numbers guy, big nerd, but I also love dealing with people and helping to solve problems. So it just has seemed to be a good fit for my personality and for what I like to do, and how I like to help people be successful. We've been involved in the solar industry, my team specifically down here in Missouri, for about the past 5 years. Got involved on the utility scale side, working with asset management, asset managers namely, and out of that we've found ourselves working in a variety of different deals across the United States, both on the utility scale, C&I, and residential installer side. So it's a unique industry, specifically here in Missouri, Arkansas, Illinois, a whole lot different than what you'd see in California, North Carolina, Florida as well. So it's been really fun.
What are in your mind, the major considerations that solar installers, developers, and asset owners need to be thinking about when it comes to insuring solar projects? And this has to do with their customers, okay, the residential and C&I facility owners who are going to be hosting solar facilities, but then also the IPPs who are going to be long-term asset owners of, say, portfolios of community solar. What are the major considerations? And then maybe we can dig into some of the nuances. But I'd really like to just set the table for our audience on what are the major considerations.
Yeah, from a risk management insurance side of things, there are a lot of factors that are, somewhat uncontrollable, but geography, location is probably the biggest piece right now. And depending on where you're located, that's, somewhat out of your hands. But coastal risks are inherently going to sustain more loss than you would see in the Midwest. So, those are things to be cognizant of. We're seeing a lot of construction of all types, but it's specifically solar being built in more high catastrophic weather prone areas just due to land costs, lease costs, and sprawl. Land is the one thing that they're not making more of out there, and it's harder to come by. So cheaper leases are going to be in low-lying floodplain areas and things like that. So when constructing or developing a site or designing a site, it's really important to understand those geographic considerations, and then also design the site to sustain direct hail hits, what type of weather anomalies you're going to see. Are you in a wildfire prone area? Are you in a flood prone area? And then what type of convective storm frequency do you see at that location? So we're seeing not your traditional claims like flood, hurricane, hail causing a lot of damages. We're also seeing lightning strikes being a big proponent of interruption, VI losses and equipment breakdown claims that we're seeing. And that's, across the Midwest included. So there are a lot of different things to consider when building the site right now.
I mean, I think it's a given that people are avoiding lowlands, even though the rents are cheaper in lowlands. Developers know that you don't want risk of flood, and it makes it difficult to finance a project. But there are so many things that we can't control, like hail, lightning, tornadoes. Here in the Midwest, we luckily wildfire is not a major concern for us here in the Midwest, but of course that's a concern out west. And I've heard of solar arrays do catch fire. It's hard to believe, but solar arrays do catch fire, and solar panels will burn if they get hot enough. But the things that I notice in the solar trade magazines, in the solar news is for sure hail. And, everybody asks that question when they're considering solar, does it withstand hail? And the answer is yes, to a limit. And, they're tested basically to 1 inch hail. Well, you can have, baseball sized hail, and that's going to destroy your solar. And those events are changing. My understanding is that those events are becoming more frequent. And you really, there are some emerging products to help control. The tracker manufacturers are thinking about this, and is there a specific way that it can, go into a hail stow, facing away from the wind, perhaps, to avoid the direct hits and that kind of thing. But are there things that we energy professionals just aren't thinking enough about when it comes to technology to avoid or reduce the risk of catastrophic weather events?
I wouldn't say there's stuff that is not being thought about. There's certainly a lot of research and advancements happening, in the productions of these modules, and also, research on most efficient stow angles, stuff like that. But inherently, the more technology that you put into the site to avoid losses, those are going to be more expensive to construct as well. So there's that fine line of does the project still pencil with these different racking that we're installing and different technology, more expensive panels that we're putting in to resist a likely or possible hailstorm. Does that work? So there's always that cost benefit analysis that needs to be done. but there's a lot being done, and I think these panels are getting more resistant over time. They're better quality manufactured, and they're also getting cheaper as well, which is helpful. But hail is one of those things that it will be around, and it's just something that we're having to price for on the insurance side.
So is there a pie graph or something though that explains here are the major risk factors for a solar farm in Missouri, and you can say, oh yeah, 20% is going to hail, 20% to high wind.
Yeah, there is, and surprisingly, a lot of it's just equipment breakdown, and it's maintenance of your site, and it's how well you're managing your site from a replacement parts component, your vegetation management. I've had a couple claims where we've had critters get into components that are chewing up wires or crawling into boxes and creating fires. I had a rattlesnake burn up several inverters and a couple strings of panels. I mean, it's crazy the types of claims that we see managing these, but surprisingly, the more frequent claims are going to be more equipment breakdown and losses that could be minimized if there was better procedures from the O&M and the asset management standpoint on replacing these damaged components or having access to replacement parts to get these things up and running sooner.
So is that something that an asset owner can, for example, create a very rigorous O&M program and thereby reduce their rates because they have, built in that they're going to do a physical site visit every 6 months or something like that?
100%, yes. 5-6 years ago, the underwriting process of underwriting one of these sites or facilities was totally different than it is today. Historically, we'd look at, where is the site located? How large is it? Who built it? Things like that. Now we're getting down to, who's the OEM of the panels? Who's the OEM of the racking? Who's the inverter manufacturer? We're looking at the direction that these things are facing. We're looking at elevation, all sorts of different underwriting components that are going in. How far away is the fence from the edge of the modules? What does our vegetation management plan look like? Do we have replacement parts? All sorts of things that are to be expected now during the underwriting process that historically weren't. And so you can really see a different tier of manager that has quality answers to these, can produce, site plans, emergency response plans, has lists of all replacement parts, has things in stock, all sorts of things like that help minimize the amount of downtime that you're seeing as a result of a claim.
And I'm going to ask a bunch of relatively stupid questions. You'll have to forgive me. But can if you're an asset owner, you're banking on a certain amount of productivity from a site, right? You want the model, the financial model, to be met by reality, right? You want the solar farm to produce as many kWh or megawatt hours of electricity as you predicted, so that the project is financially viable, right? And obviously, if things are breaking, whether that's panels or inverters or even racking, right, the tracker can break and you're not getting as much production out of it. But can you ensure that production? And because, I'm just curious, what exactly can be insured about let's say a community solar, a 1 to 5 megawatt solar farm?
Oh yeah. Well, short answer is you can buy insurance for anything if you got enough money for it. But yes, we insure. It's called business interruption or BI insurance. If there's a claim or covered cause of loss, a hailstorm, fire, equipment breakdown, the insurance companies will start replacing your lost production after a certain period of time, up to typically 12 months for a site. And so what's developed in the recent years is that duration of time, think of your deductible that they start replacing your lost production, has gone from we used to be able to have 3-day waiting periods, then it went to 15 days, then it went to 30 days. It's not uncommon to see a 45-day waiting period or a 90-day waiting period on specific locations, which means the insurance company won't start paying for your lost production until, your site's been down for 30 days, 45 days, 90 days. So these financial models that a lot of these sites were, sold on have not been accurate. You kind of hit the nail on the head. A lot of these sites aren't as productive or not meeting the model projections. And a lot of it has to do with the downtime from some of these weather events that weren't in those financial models, production from weather interruptions, whether it's poor weather, cloud cover, and things like that, where you're only hitting 80% productivity even without weather event damaging the site. So all that can be insured. That's more of like a solar put project or solar put product if we're just not producing as much energy as we thought we would. So both things can be insured. Yeah.
Okay. And what are some of the trends that you see? You said that the process of going through underwriting has changed dramatically in the last 5 years. What are some of the major trends that you see? I know insurance rates are going up across the board in the world in general, not just in clean energy, but in all forms of insurance. But what are the trends that our listeners would be interested to know?
Yeah, on the utility scale side, the trends really are these insurance carriers trying to return to a state of profitability. And to do that, inherently they have to increase rates, as you just mentioned, but they also have to change, their deductible structure. So you're going to see larger deductibles on your projects. You're going to see longer waiting periods. If you did have your site lose productivity for a sustained period of time, you're going to see not as much insurance available to you at the marketplace. We call this capacity. So if I have a $50 million project, historically the insurance carrier would say, I'll insure the full 50 million. I'll give you full limits for wind and hail, for flood. You'll also have 50 million, you name it. Now you're going to see, sure, I'll insure your $50 million site, but I'll only give you $5 million worth of flood insurance. I'll only give you $5 million worth of wind hail coverage. And so you're seeing that as well. And that's going to continue until they hit that inflection point of, are we charging enough premium? Do we have asset owners taking on enough risk from a deductible waiting period standpoint to where we're adequately pricing these projects for the events or for the losses that we're seeing so that we're all making money here?
The Clean Power Hour is brought to you by CPS America, the maker of North America's #1 3-phase string inverter, with over 6 gigawatts shipped in the U.S. The CPS America product lineup includes 3-phase string inverters ranging from 25 to 275 kW. Their flagship inverter, the CPS 250-275, is designed to work with solar plants ranging from 2 megawatts to 2 gigawatts. The 250-275 pairs well with CPS America's exceptional data communication, controls, and energy storage solutions. Go to chintpowersystems.com to find out more. And then there's this whole phenomenon of reinsurance, right? And are you in the reinsurance business?
We are as an organization, Alliant. Yeah.
Yeah. And so you're insuring other insurance companies whose losses from catastrophic events are going up over time. And sometimes these companies go out of business. I don't know if there's been anything in clean tech that has been so dramatic, but what are the mega trends, that are points of conversation at your office?
Yeah. So, on the reinsurance side, you're seeing some of the same issues, namely from a capacity standpoint. And so if I'm buying insurance for my house, good analogy, let's say I'm buying insurance from Travelers for my house. And I've got a $500,000 house and a $1,000 deductible. If I have a claim, you assume Travelers is insuring that full 500,000. Well, on large commercial solar projects, that's not necessarily how that works. Is the insurance carrier, Travelers in that example, is really only insuring that first $5,000 for the loss, for example, and then they actually buy insurance for themselves. So instead of saying I'm on the hook for that full $500,000 loss, insurance carrier, am only responsible for the first $5,000, and I shift that other $495,000 of risk off to the reinsurance market. In the reinsurance space, those attachment points are getting higher, and the cost to purchase that reinsurance is increasing as well. And so when you go to buy that policy from Travelers in that example, you're seeing the price increase at your premium level, and it's getting more and more difficult for them to place that insurance. And if they're having to take on a higher attachment point, instead of being able to say, I'm going to shift my risk at 5,000, instead I'm going to have to shift my risk at 25,000. Well, that limits the number of policies that, Travelers in this example is able to sell, across the board. And so they're getting more stringent and deploying their limited amount of capacity more selectively across the market. So it's getting harder to place projects as well at the same time. It is kind of the full circle roundabout there.
It's getting harder to place projects. Is that what you said?
Yes. Yeah. I mean, there are a lot of new entrants. There are a lot of MGAs available, but you're seeing fewer carriers being able to insure a full portfolio. A lot of it's going to what we call like a pro rata share or tiered placement. So you'd have carrier X write 25% of a portfolio, carrier Y another 25%, and carrier Z write the other 50.
Okay.
So instead of being able to go to one insurance company to place your entire portfolio, you're now having to get more creative and go out to London and find different syndicates that are able to place a tiered or pro rata share program. So it's getting more complex every year that goes by.
I would imagine too that you have a purview into, for example, types of equipment, certain OEMs, and getting a signal on, well, here's equipment that has a very high level of performance, and here's a manufacturer that has a lot of problems and a lot of breakdowns. Does that go into the calculus when you're underwriting a project or portfolio?
Very much so. Yes. So, and that's something that's changed in the past 2-3 years is getting more critical on who the manufacturers of inverters, namely. Right now, there are a couple names in the industry that are like saying Voldemort to Harry Potter reader. Is the insurance underwriters just don't want to hear them, and the issue is some of these manufacturers have stopped manufacturing direct replacements to certain components, or they're manufactured overseas and there's some supply chain issues to get the replacement components over here, and they're just not available. There's big glut in supply and with some specific manufacturers, so that's an issue. And there's a central inverter manufacturer that we've had some issues with as well. So what insurance companies, insurance carriers, the people providing the coverage for these sites have started doing is, okay, we're going to underwrite your entire portfolio, but if you have this, OEM at this site, we're going to implement different deductibles or limit coverage just for that one site in response to that, to help protect ourselves, because we know, at a large scale basis that they're having issues supplying direct replacement parts, and that site's probably, if we have a claim there, you're going to be down longer than you would if you were not, if it was not made by that OEM.
Sure. Yeah, I think that's definitely one of the things driving the trend from central to string inverters is it's easier to have replacement parts on site. You could just have a shipping container with string inverters in it, right? Whereas a central inverter may or may not fit in a container.
Yeah.
But
very much so. Yeah.
Not to mention the cost. So, well, I have a couple questions related to this. Is there like a guide that you issue a white paper or a guide for developers and asset owners saying, hey guys, here's how to, ease your pain and improve insurability and reduce your rates over the long haul?
We do, yeah. So we our Alliant Energy practice, pushes out white papers and good things for developers to have quarterly. We, at an enterprise level, we publish quarterly updates as well. One thing we don't do is publish the names of those OEMs to be cognizant of. It's not healthy to sling mud, right? But it is important to be aware of how to best position your portfolio for success in the marketplace right now. Mm-hmm. And a lot of that is going to be the partners that you choose to operate that site from an O&M standpoint and from an asset management standpoint, because they are the ones that will be able to respond, in the event of a loss quicker.
I mean, Bloomberg has gotten famous for their tier 1 list, which includes solar modules and inverters. And what many energy professionals don't realize is this is more about the financial standing of the company and the manufacturer than it is about the quality of the equipment. There's two separate things there. And it's more about like the likelihood of the company being in business in 5 years. You can have fantastic products that are very high quality, but are not tier 1 because the company that makes them doesn't have a certain brawn financially. And the inverse, right? You could have a tier 1 module or inverter that, is made by a huge multinational manufacturer, but has relatively low performance in the field. Mm-hmm. And that's where organizations like PVAL come into play, right? That are doing this, these standardized equipment testing and reporting. I'm a huge fan of what PVAL does. But in that regard, is there a parallel universe to the Bloomberg Tier 1 in the insurance world?
Short answer, yes. A lot of those more reliable and more financially stable manufacturers are typically the ones that have the better quality products and will be around. A lot of these sites are aging as well. So we've got sites that are, 10, 15 years old. And if the manufacturer is no longer around, what happens when you have a claim? How do you replace those exact components to get the site back up and running? So that's important consideration when
Sure.
looking at the insurability of a project as well.
Cool. Well, I'm a little hobbled because I don't know what I don't know. Like, what else should installers, developers, and asset owners be thinking about when it comes to insurance for themselves and for their customers?
Yeah, I mean, installers are kind of seeing a totally different difficulty in the insurance, or when it comes to insurance right now. They have different things to consider than, an asset owner or an asset manager. A lot of their insurance is going to be mostly casualty driven. So we're talking about general liability, auto, work comp type considerations compared to just, insuring the actual asset. But typically they're going to have more employees as well. So we have things like medical marijuana and employment practices trends to be aware of as well. And unfortunately, on that side of the business, auto insurance and liability insurance is no easier to place than property insurance right now. So you're seeing in the residential installer market, last year was a very tough year. A lot of their business is dependent on interest rates and how easy it is for the homeowner to finance a solar array on their roof. And so if you go from 3% financing to 9% financing in a period of 8 to 12 months, it really impacts your ability to sell these projects. So that was tough. Fortunately, I think homeowners are getting to a new state of normal, and we're seeing that across the economy as well. I mean, inflation just went up last month, even with these record high interest rates. So people are getting accustomed to buying high ticket items at a much higher rate. So hopefully we see sales rebound. But last year was tough, and what you're seeing are a lot of liability claims on roofs. I've got a fire that I've got to go out to Tennessee to next week that was from an install 2 years ago. And so that is impacting how many carriers are willing to insure these installers. And just 4 or 5 years ago, there was an abundance of insurance companies that were willing to offer insurance to these installers, both on the residential and commercial side, because it was a new industry. These insurance carriers didn't know what they didn't know. Even being a 15, 20-year-old industry, that's still young in the world of insurance. And so these insurance carriers weren't really sure what types of claims they'd be seeing, what the product liability standpoint was, and we're seeing a lot of liability claims come out of that. So the abundance of carriers has just continued to shrink, and so we're seeing larger installers look at more like loss sensitive or creative risk financing products like group captives, single parent captives, things like that to provide insurance.
I didn't understand those last two things you said.
Yeah, so captive insurance is getting really popular, both on the utility scale side to some extent, but more prevalent on the installer side.
Okay.
So so a captive, very simply, is an insurance company that's wholly owned by its members or by its insurers. And so you maybe have a group of people that say, hey, we are tired of having to buy insurance in the marketplace, and we're tired of seeing 10%, 15% increases every year. We think we can provide our own insurance more efficiently. And so you go out with either other members or by yourself and go buy or go solicit the same services, actuaries, attorneys, accountants, fronting paper, all those sorts of things. And you're able to underwrite your own losses, your own risk. And then you're kind of insulated from, what the marketplace is seeing from a trend standpoint. So that is becoming much more popular for larger installers right now.
Fascinating. Sounds like
I'm glad you think so. Most people fall asleep by now.
It sounds like in a way that's like a buying co-op. There's an organization called Amicus in the solar industry. I don't know if you're familiar. And where installers can, they join this, they pay an annual fee, and then they participate in a group buy of equipment and thereby achieve a discount.
Yep.
Is that a good analogy to this captive insurance phenomenon?
Yeah, from a 35,000 foot level, that could be a good way of putting it. Really, it's we're coming together and we are providing our own insurance, and we're able to do it more cost effectively and more transparently than we can in the marketplace. You know exactly how much of your dollars are going to pay for those fixed cost services that you need to find. And then you also know how many of your dollars are going to pay claims. And if you pay less claims than you set aside to, or if you have less claims than you set aside to pay for, that difference gets returned to the members versus just going to the profitability of the insurance company that underwrote the policy. And so it's a very creative way, and it's a great fit for the right organization.
Mm-hmm. So in our last few minutes together, what else, is on your mind? What keeps you up at night? What are you both excited and, concerned about with regards to the direction that the industry's going? I mean, we're massively growing the industry now, right? And, today, solar's around 5% of the grid. By 2050, it's going to be 50% of the grid. It's going to 10x, and so that's a huge shift that is happening. So I'm curious, what does the future look like, and what is it that keeps you up at night?
I think the future looks bright. I think 100% certainty, 50% of the grid will be hopefully solar. 100% certainty it'll be renewables by 2050. I think the thing that keeps me up at night is that renewables and solar should not be a partisan issue at the state level. And you have different states that are much further along in adapting this technology and implementing it into the overall, production, energy production of the state. Mm-hmm. And then you have some states that are, laggards for a variety of different reasons. The cost of electricity in certain states is significantly lower than others. But that's the part that keeps me up at night is, overall it's great for an economy to, integrate solar into the grid, I think. And it creates jobs. It's, it's a good thing. I just hope that all states can adapt to that and advance the industry nationwide. Because I would hate to see solar be 50% of the grid, but it continue to be isolated in certain geographic areas of the country. So that's the one thing that I hope we improve upon.
Well, so do we. There's no doubt about that. It's frustrating that solar is a regional phenomenon and that it's so different just crossing a border. You go from Illinois to Indiana or Illinois to Missouri for that matter, and it's night and day.
Right. Yeah, it's funny that I live in Missouri and do business in Missouri, Arkansas, Illinois. I mean, just the difference between those three states is tremendous. So yeah, hopefully one of these days we'll be all on the same page, all on the same playing field at least.
I mean, my gut tells me you must be working a lot in Illinois. Out of those three states, like there's a lot more solar happening in Illinois than any of the other two, isn't there?
Yep. Yeah, there is. Yeah. And we work nationwide. We work in Florida, Texas, the Carolinas, Illinois, Ohio. That's where a lot of the activity is. And then, Alliant nationally, we're headquartered in California, so we do a ton out in California as well.
Okay.
Which is all good for solar, right?
That explains probably why we're talking, actually,
Yeah.
Alliant is an early adopter because California was an early adopter. And it's the most mature market. I mean, outside of Hawaii, it's the most mature market. Hawaii's just a very small market. Cool. Well, I want to thank you for your time, Hunter. I look forward to hopefully having some of our listeners reach out to you and get their questions answered. You can find all this content at cleanpowerhour.com. Give us a rating and a review on Apple and Spotify. I mean that in all sincerity. It really helps others find the content. And subscribe to our YouTube channel. Hit that bell. Please reach out to me on LinkedIn. I love hearing from my listeners, or at cleanpowerhour.com. Hunter, how can our listeners find you?
You can find me on LinkedIn, also at alliant.com. That's our website. We have a lot of this information that we discussed today posted there. But yeah, feel free to reach out to me. I'm sure my contact information will be listed here with the podcast as well. Awesome.
Well, with that, I'll say have a great weekend and let's grow solar and storage. Thanks so much, Hunter.
Thanks, Tim. Appreciate the time. Bye.
Hey, listeners. This is Tim. I want to give a shout out to all of you. I do this for you twice a week. Thank you for being here. Thank you for giving us your time. I really appreciate you and what you're all about. You are part and parcel of the energy transition, whether you're an energy professional today or an aspiring energy professional. So thank you. I want to let you know that the Clean Power Hour has launched a listener survey, and it would mean so much to me if you would go to cleanpowerhour.com, click on the About Us link right there on the main navigation. That takes you to the About page, and you'll see a big graphic, Listener Survey. Just click on that graphic, and it takes just a couple of minutes. If you fill out the survey, I will send you a lovely baseball cap with our logo on it. The other thing I want our listeners to know is that this podcast is made possible by corporate sponsors. We have Chin Power Systems, the leading three-phase string inverter manufacturer in North America. So check out CPS America. But we are very actively looking for additional support to make this show work. And you see here our media kit with all the sponsor benefits and statistics about the show. You know, we're dropping 2 episodes a week. We have now over 320,000 downloads on YouTube, and we're getting about 45,000 downloads per month. So this is a great way to bring your brand to our listeners, and our listeners are decision makers in clean energy. This includes project executives, engineers, finance, project management, and many other professionals who are making decisions about and developing, designing, installing, and making possible clean energy projects. So check out cleanpowerhour.com, both our listener survey on the About Us and our media kit, and become a sponsor today. Thank you so much. Let's grow solar and storage. The Clean Power Hour is brought to you by CPS America, the maker of North America's #1 3-phase string inverter, with over 6 gigawatts shipped in the U.S. The CPS America product lineup includes 3-phase string inverters ranging from 25 to 275 kW. Their flagship inverter, the CPS 250-275, is designed to work with solar plants ranging from 2 megawatts to 2 gigawatts. The 250-275 pairs well with CPS America's exceptional data communication, controls, and energy storage solutions. Go to chintpowersystems.com to find out more.